your strength is basically a necessity-based retail portfolio. So obviously it helps to make sure that you get stable demand, but things are changing. Retail is changing, and we've got the e-commerce really, and retail trends, the behavior is changing as well. So do you think about somehow adapting your tenant mix down the road?
Sure. Because we're managing 17 neighborhood malls, like 16 in Hong Kong. So basically, over 70% of our trade mix is in the necessity trades. So those would include like food and beverage, supermarkets, some services and education, like with like kindergartens, education providers, etc. But as you said, there are changing spending patterns of residents in Hong Kong, and also we're partially also impacted by the northbound travel that seems to continue to increase week on week. And also there's a lot of traveling during summer holidays. So so far what we've seen is I think we have done a lot of marketing promotions campaigns, especially to promote on weekends to encourage people to stay. So in the first half we actually spent more on marketing, and so far I think it has become a bit fruitful, because overall the traffic count only dropped by around 1.5% in the first half, and we actually see gradual improvements in May and June. So that's a positive sign. I think overall our occupancy remained quite high at 95%, with a tenant retention of 82%. So a lot of the tenants, like over 80% of the tenants, decide to stay with us, continue to work with us. We see that besides us making changes, our tenants are also adapting to new changes. They are also trying to see, see how they can improve or make their products more attractive, more value for money, in order to attract people to stay in Hong Kong to spend, and also to attract people from outside the district to come as well.
Right, and some of the tenants that decide to stay with you, are they asking for a discount? Are they somehow pushing back on some of the management fees that you get to collect? Because look, things are tough. People are traveling to Shenzhen over the weekend and not staying here in Hong Kong and spending money.
Yeah, sure. I think it really depends on the trades. Some trades are actually performing better, compared to last year. I think if we look at the overall government retail sales figures, we actually, see signs of improvements in May and June. There was a 14-month decline all the way up to April 2025. But for the past 2 months, we actually see some increase year on year, and we're actually seeing the same in our portfolio as well, in terms of traffic count, in terms of how tenants are doing business. So I think people are, tenants and also mall operators, they are trying to adapt to the changes, and hopefully, we can create a sustainable environment for both ourselves and also our tenants.
How are your tenants doing? I note that there was a negative rental reversion.
Yeah, I think overall, revenue for the first half of this year actually declined a bit, mainly due to negative rental reversions carrying on from the second half of last year and also the first half of this year. But we do see that for some of the trades, the trend is narrowing. Although we're still getting negative reversions, but at least the reversion rate is actually narrowing. And then some of the trades we're actually getting slight positive or flat kind of rental reversions. So I think with all the efforts that the government is putting in to attract tourists and attract talents and students to Hong Kong, and also with the tenants and us also adapting to changes, we hope that in the second half the malls can actually perform a little bit better than what we had in the first half. Among
your tenants, there are real estate agents, and they saw less negative reversion. What is that telling you about the property market here?
I think the first half of this year, we were partly helped by the the wealth effect that came with the stock market doing well, the property market transaction is more and more transactions this year. So I think people actually feel the wealth effect. So you will see that the stock market has gone up so much. I think people are more willing to spend. They come out a bit more. So I think because for our type of neighborhood shopping malls, basically we depend mostly on domestic spending. So with this wealth effect, I think that would actually help our type of malls, for people to come and spend.
What kind of premise are you running on, or what kind of rate expectations and macro expectations that you're operating in right now? Your base case perhaps?
Right. I think so far, going into the second half of this year, we're still experiencing negative reversions. So I think that would probably continue in the short term, but we're quite confident about a lot of the government measures that have put in to attract talents, because those talents they're actually coming to Hong Kong and live here. So that would actually increase the demand for shopping in like neighborhood malls or in like residential districts. So that should be a boost for us. And on top of that, I think the HIBOR has been staying low since May. So REITs being an interest rate sensitive product. So if the rates continue to stay low, and we're around 50% hedged, so 50% is actually on floating rates. So that should also help our bottom line, going into the second half of the year.